Hi everyone, happy Friday Money Wind Up. Today I thought we'd talk about buying in a high price, high rate market. So, what actually matters now? If you're waiting for the right time to buy because rates are high and prices are high, you're not alone. But here's the blunt truth most buyers are focusing on the wrong things, and that's costing them years. This market isn't about timing perfection, it's about making smart trade offs. Let's talk about what actually matters now and what really doesn't. So, borrowing power matters less than cash flow. This is the biggest shift. In a high rate market, serviceability is tighter, repayments bite harder, and buffers matter more than ever. Just because a bank says you can borrow a certain amount doesn't mean you should. What matters now? Can you comfortably afford repayments if rates don't fall for years? Can your lifestyle absorb higher repayments without relying on bonuses, overtime, or it'll be fine thinking? Do you still have room to save, live, and handle surprises? Because they'll happen. Borrowing to the max is how people get trapped, not ahead. So, rate strategy versus purchase price. People obsess over buying cheaper properties. In reality, the loan structure will often matter more than the price you pay. In a high rate environment, fixing everything can backfire on you. Staying fully variable can be risky. Offsets are more powerful than rate discounts, and flexibility is often worth more than the lowest headline rate. A slightly higher purchase price with the right loan setup can outperform a cheap buy with a poor structure. This is where buyers either win quietly or bleed slowly. The property needs to work longer term. Gone are the days of buy anything and it'll go up. What matters now is scarcity, the location, the land, zoning, or the uniqueness of the property. Livability, not just resale fantasy. What if you can't sell and rebuy? You're doing it all in the same market. You've got to be able to live in the property. Rental resilience if plans change. Renovation or value add potential, even small. So if the property only works under perfect conditions, it's the wrong property. So your deposit strategy is critical. In high rate markets, deposits do more than just get you in the door. A stronger deposit can reduce lenders' mortgage insurance, improve rate options, lower repayments and your risk. And it can also create future refinancing flexibility. So sometimes waiting 6 to 12 months to strengthen your deposit beats rushing in just to own something. Buying sooner is not always smarter. Buying stronger is. Timing the market is a distraction. Let's be honest, no one rings a bell at the bottom. What matters more than timing is buying a property you can hold through cycles, entering when you are financially stable, avoiding forced selling scenarios, and having buffers, cash, offset, flexibility. People who win long term usually didn't buy at the perfect time, they bought well and held it. Stress testing is non-negotiable. You need to ask yourself some hard questions. Ask yourself, what if rates don't drop? Can I continue to service this debt? What if one income disappears temporarily? Can you afford it? What if childcare, school or health costs increase? And what if you want to refinance and can't? If the plan only works when everything goes right, it's not a plan, it's hope. In this market, bad advice is expensive. Generic online calculators, blanket fix now takes, or friends' 2021 experiences are not relevant anymore. You need advice that is based on today's lending rules, considers your real cash flow, builds flexibility, not just approvals, and plans for the next move, not just the purchase. This is not the time for shortcuts. So, bottom line, buying in a high price market with high rates isn't about being brave or reckless. It's about being deliberate. Forget chasing the lowest rate. Forget waiting for a crash. It's not going to happen. They keep telling us that. It hasn't happened yet. Certainly not in Queensland. Forget borrowing the max just because you can. Focus on your cash flow. Focus on the structure you're offered and focus on buffers. Focus on a property that still makes sense in 5 or 10 years. That's how people buy confidently now and don't regret it later. So if you're thinking about buying and you're unsure whether the numbers actually stack up for you, that's normal in this market. A quick, honest conversation with a broker can often clarify what's realistic right now, what could improve your situation, and whether buying sooner or waiting makes more sense. No pressure, no hype, just clarity before you make a big decision. Guys, it's Friday afternoon. Happy Friday Money Wind Up and have a great weekend.